Hi, good afternoon. I am Chitan. I'm Desmond.
And I'm Derek.
We are from class DCBP 1A09.
Today we will be presenting on the Easy Accounting software.
This video presentation will be an introduction on the function of the Accounting Easy software. Easy software is a software that helps accountants generate electronic versions of business accounts and transactions to produce financial statements such as the trial balance, profit and loss statement, and balance sheet statement. It helps companies to feel safer and more professional as it is not so taxing on everyday accountants and assists them in carrying out their duties. How are source documents translated to business transactions? Are you curious to find out too? Let me help you clarify your doubts. Firstly, during a business transaction, source documents such as invoices and credit notes could be presented to either the company or the customer. Each party will receive either the original copy or the duplicate copy of the source document. An invoice is presented when goods are purchased or sold on credit. An example of an invoice being used in our company, Electric Private Limited, purchased 73 computers from Rutherford Private Limited on credit. This can be shown in our general journal where we debited inventory and credit accounts payable Rutherford Private Limited. A credit note is used when there is an overstatement or return of goods. In our case, a credit note is presented as a result of the return of 11 units of computers back to our company due to the wrong specifications from Rutherford Private Limited. Therefore, a credit note is sent to their company. This can be seen here. The company's bank. Secondly, a bank statement is also a type of source document that is issued to our company from the bank, which shows transactions that impacts the company's bank account. The company's bank account needs to be reconciled with the bank statement to check for discrepancies. Otherwise, the company might overstate or understate its cash account, resulting in an inaccurate cash account. Therefore, according adjustments should be made to the cash account. For example, such errors such as service charges from the bank, dishonored checks, outstanding checks, or errors made by the company itself during the recording process. The company must ensure that the amount of the bank accounts tally with the bank statement. An accounting concept based on source documents is the objectivity concept. It states that any business transactions should be supported with a reliable and verifiable evidence supported by source documents. Now, I will pass on my time to my good mate Derek to share with you more about accounting concepts and principles.
Whoa, thank you Desmond for the wonderful explanation. Now, I will take over and explain about the principles and concepts that were used in the project. For the accounting principles, the principle that we identified is the matching principle. The definition of matching principle states that expenses incurred and income earned must be matched from period to period to calculate the profit and loss for the same period. This software will allow companies to record down any accrual such as revenue receivable or salary payable. This is so that the company can produce a post-closing trial balance for the month or year ended that is correct and reliable, as all expenses and revenues are recorded down in the general journal on the date the company is informed. In our general journal, one of our double entries require us to use this principle. For example, we have to use salary payable as the company did not pay the staff and part-time staff for the year ended March 2019. This is as shown right here. With that, I will now share with you the two accounting concepts that we identified. The first accounting concept is the accrual concept. The accrual concept states that expenses incurred and income earned should be recognized, regardless if it is paid or received. This helps the company adjust the values for the financial statements and the net profit or loss. This, for example, in the general journal, we have to make adjustments due to prepayments for insurance expense from CD Life Insurance Private Limited. We debited prepaid insurance and credited the cash account as shown over here. The second accounting concept identified is the going concern concept. The going concern concept is a concept that assumes a business will continue to operate in the foreseeable future. This easy software is very flexible and accountants can use this every month to generate the statement of profit or loss. The statement of profit or loss generated can provide the company with details on whether it will be able to continue with its services for the following month or year, or whether the business will cease at the end of the month or year. As you can see over here, this is our statement of profit and loss for our company. Our company has a net profit of $7,425 for the year ended March 2019. And now, I'll pass the time over to Junhan. Junhan, please.
Thank you, Derek. Now, I will elaborate on the usefulness of easy accounting software. Firstly, easy software is extremely convenient, allowing companies to keep track of their transactions and financial statements with ease. This is due to easy software automatically generating the trial balance, profit and loss, and the balance sheet report when the company's transactions are entered into the general ledger section. These reports can be easily accessed with a few clicks due to Easy's detailed yet simplistic design. As you can see here are the trial balance, profit and loss, and balance sheet. Furthermore, companies can view specific transactions that occur on a specific date, emphasizing its convenience, as opposed to rummaging through business files and books to attain the same information in real life. Secondly, easy accounting software is extremely dependable. Now, why is this so? Well, this is due to the software's nature, being useful in calculating and generating numbers accurately. Accountants and bookkeepers can be prone to human error, even with years of experience under their belt, calculating and recording wrong transaction values, causing misinformation and confusion to the company. Evidently, easy software removes this error from the equation. Additionally, one other factor that shows Easy's reliability would be the general ledger opening balance control account. Upon clicking on the general ledger opening balance, the aforementioned control account will be generated, allowing users to correctly input their opening balance accounts and confirm that the debit and credit sides tally when the control account is 0. As you can see here, that's the opening balance control account. And since this debit and credit sides tally, all is okay. Moving on, what key areas can easy software be further improved on? Well, with my personal first-hand user experience, I believe easy software can improve on assisting users with navigating and using the software better. Easy software does provide an easy help file with information to help users. However, information given can be vague and limited. As you can see here, the information are very limited. Easy software can be more specific in this aspect by further elaborating and even include videos instead of just text to clarify doubts and resolve the issues pertaining to the software. Another key area that easy software can improve on would be its design. My first impression of the software was fairly negative, and I was skeptical of its effectiveness due to its own design making it seem outdated. Although these impressions soon changed as I spent more time using the software, I still believe that this design should be changed to a more modern one. This is because, with the rampant growth in technology, people nowadays question the use of old applications and are genuinely not attracted to old and basic design, favoring unique and vibrant ones. Hence, easy software should change its design to make it seem up to date, enticing a greater number of users and appealing more towards the younger people. We would like to sincerely thank our lecturer, Ms. Sylvia, and our accounting module coordinator, Mr. Ronnie Ho, from the bottom of our hearts for their assistance and making this presentation possible.